We have Blue Collar Bill on. And yeah, why don't you just go ahead and introduce yourself?
All right. Thank you, Frank, for having me on. My name is Bill, also known as Blue Collar Bill. I have a website, bluecollarbill.com, and I'm also on Twitter. Um, I'm a 51-year-old factory worker, worked in factories for over 25 years now. And just recently, a couple years ago, got into investing, realized that I need to do something for my retirement because Social Security loan wasn't going to cut it. And I couldn't see myself working in a factory until I'm 65, 67, waiting to collect Social Security. So on my website, it's kind of a financial journal, basically tracking my journey. And that's pretty much it right now. So,
Yeah, so I guess could you tell us a little bit about like what made you want to take more control of your finances, I guess, and where you sort of learned about some of these things?
in August of 2019, I quit my job that I'd been at for almost 15 years. And when I moved to a new job, um, my old job had a profit sharing retirement plan where the company just put in money every year into a plan for you. We had no control over it or anything. But when I left, I knew I was going to be getting that money. So I'm like, at the time I was 48 years old. So I'm like, kind of need to do something now. So when I get that money, I wanted to make sure I was investing it and not just taking the penalties and paying the taxes and stuff when it came over. So I wanted to make sure I rolled over an IRA. And I'm like, I really got to do something now and make sure I can have a retirement. So I started researching investing and stuff and got online reading articles and found YouTube and started watching Gen X Dividend Investor was a big one that I started watching. He got me involved. Matt Money was another one. Um, Independent Investor and stuff. Those were the main ones that got me started and got me interested in dividend investing. And so I just started watching more, learning more, taking in as much as I could in order to start my investing journey and stuff. Then
Yeah.
later on, I found Jerry with Retire with Less, and he really resonates with me because I'm never going to be a millionaire. Um, time's not on my side anymore. Um,
Yeah.
but I can keep investing and stuff, and I don't need to be a millionaire in order to have a good retirement. So
Yeah. That's what I sort of like about his channel as well, is it's very like practical and just kind of trying to, make do with what he has and try to show that that's possible, which I think is great. So you mostly invest in like dividend type stocks, right?
well, mostly dividend stocks. I do
Okay.
have one very small account that's more growth focused. It's
Okay.
not done very well. But yeah, mostly dividend stocks because that kind of fits me, my personality. Because dividends is kind of like getting a paycheck, and I mean, I can understand getting a paycheck. The growth stocks, it's like I said, I do have the small account, but if I was a strictly growth investor, I'd probably be out of investing now after this drop off and stuff. Because at least with dividends, I got the dividends going in. I track my uh, projected annual dividend income, and I can see that continue to grow no matter what the account balance is. My income from dividends continues to grow, so that helps keep me investing.
Yeah, that's kind of something that just makes sense to me with dividends as well is it's sort of like you're just sort of slowly, incrementally, realizing some income and gains over time. Um, and it's more, I guess, for a lot of people, like psychologically, sort of the fear of losing per se is greater than the feeling you get when you gain like an equivalent amount, I guess.
Yeah.
And so to me, dividends is like a almost a hedge against that kind of feeling, I guess, just because you're like slowly making some money over time. And so if the stock drops some, like it's not that big of a deal. And like you said, you're getting that income. And so you're constantly seeing some progress. And, even when you're like the past 6 months, um, you know, sure, my account's down, but like fundamentally, nothing's really changed. And technically speaking, I'm doing even better because I'm earning even more in dividends than before. So, um,
Yeah, that's the thing I like
yeah,
about dividend investing is because you can see progress, even if your account balance is going down. I can see the progress with my dividend income increasing and stuff. And you almost actually get excited when the market's down and stuff because when you go to buy,
yeah,
you're buying more income than what you were before because the stock prices drop. So it's
yeah,
not costing you as much to buy that dividend income. So
yeah. And also with like, if there's no dividend, like the only way you make money is when you sell. So it's just like your account can go up and down however much it wants to, but it doesn't really matter where it is in the in between part, except for when you buy and when you sell, really.
yeah,
Um,
with the
just
growth,
because, like,
you got to be able to
yeah,
time that right. When you
yeah,
buy and when you sell. And with dividend investing, yeah, you always want to buy low and stuff. But even if you don't, you're still getting the dividend income. And
yeah,
over time, especially if you're reinvesting and stuff, your dividend income is going to grow. Whereas if you're a growth, you've got to try to time when you're going to sell it and stuff. Is it going to is it up? Is this as high as it's going to go? Do I sell now? Do I wait and see if it goes up more than if it goes down? And it's just,
yeah,
yeah, it'd be too stressful for me to be a pure
yeah.
growth investor.
So, with sort of like a growth or value strategy, it's more like you have to buy it at the right price and sell it at the right price. And with dividend investing, it's like, yeah, I would like to buy it at the right price, but even if I don't, like, it's not the end of the world. You're still
Yeah,
doing well. So, um, and I think having a like strictly dividend focus isn't like 100% ideal because there's definitely chances of like dividend cuts and stuff like that, and I don't know. There's just could be things that happen and that mean that maybe you need to invest in something else, or I don't know. If you could think of the scenario, you would have already hedged against it. So I can't really think of a specific scenario, I guess. But um, I guess just like having dividend income as your sole focus, at least for me, it doesn't seem like the absolute best idea. But um, I think it is a good like strategy, and it makes sense to me. The one thing with investing in dividend stocks that I haven't quite like worked out, I guess, or just become more confident with, I guess, is the taxes side of that. And I guess that is something to take into account because you are constantly paying taxes over time, and in essence, your taxes can sort of compound, sort of. Um, but I don't know. I think in general, like the dividend companies, if you're buying like stable companies and tried and true companies, those are still gonna grow a fair bit, and you're I just don't think that the like tax argument is a good enough reason to not invest in dividend stocks. So
yeah. I don't. I'm. I haven't looked a lot into taxes to be honest, because most of my overwhelming majority of my money is in tax protected accounts,
Okay.
IRAs, Roth IRA, 401k.
Okay.
I only have a very small amount in my taxable. Um,
Okay.
but
Yeah, that
even
makes
still,
sense.
with the taxes, if I'm making more money and I got to pay taxes, as long as I'm making more money,
Yeah. Yeah,
it's
exactly. And at that point, it's just sort of like it's kind of asking the question of, am I going to make money here and do pretty well, or maybe there's a chance if I do something different, I could make a little bit more, and it could be slightly more efficient, but is it really worth my time of like worrying about it and all that kind of stuff? Maybe not. So
yeah. When
there's
I
definitely
get closer to
trade-offs.
retirement, I might look at more tax strategies and stuff. But for now, I'm just going to keep investing and keep reinvesting my dividends and growing my accounts.
Yeah. So what are your kind of goals with your investing at this point? Do you have anything specific in mind?
Um, my basic goals are just to be able to get enough income from my accounts to be able to retire and live comfortably, maintain my current lifestyle. Um, and that's going to be through dividends. That's also going to be through options. I trade options. So, and so just to get my accounts big enough so that I can support my lifestyle. So
Okay. Was that sort of like your initial goal when you started, or has that like changed over time at all, you think?
initially, when I started, um, I didn't really know what I was doing. I said, I had that money coming from my other company that I rolled over in an IRA and just started dividend investing. And then at first, I was like, this will help supplement because, like I said, to live off in dividends, you have to have a really large account or
Yeah.
some really high yield dividend stocks, which generally aren't safe. Or if you go into some of the ETFs like QILD, you can get a high yield off of that, but you're probably going to lose
Yeah.
some of your capital over time and stuff. Um, so that's where I got into options and stuff. And like I said, with Jerry with Retire Less and Dave with Hidden Freedom, watching them and stuff, and started going, I can generate some income off in options. And so that way, that gives me a path where now that I can see that between the two, I could probably generate enough income to retire comfortably and not even have to worry about Social Security. So when it's time for me to collect Social Security, the plan is for that all just be bonus money. Um,
Okay.
so like if I want to travel or whatever and stuff in retirement and stuff, that's what the Social Security money will be for.
Okay. That'd be cool. So, what is your kind of strategy when it comes to actually deploying your money? Like, do you look for specific prices on specific companies, or I guess how picky are you when it comes to that?
It's I do use a little bit of a fair value method, and it's basically off in dividend yield. I look at the um, last 4 or 5 year average dividend yield and see where it is. That's the main way I do it and stuff. And there's some that I just continue to DCA in all the time and stuff. Like I also do a hybrid approach. I'm not strictly dividend investing because I do have some index funds like VTI in my traditional IRA is my third largest position. If you
Okay.
if with my 401k with the total stock market fund that's in there, if you combine that with the VTI, that's probably my second largest position overall in my account. So yeah, I'm not strictly dividend, but I just use a fair value. And like I said, there are some that I'll just add to anytime, especially some of the funds like SCHD, VTI, and stuff.
Yeah.
Price is important, but to me, it's also better just to continue to invest. And then as far as the individual companies, like I said, I use a dividend yield to determine if I think it's at a fair value, and that's when I tend to add to them.
Okay, that makes sense. And when you're investing or doing your options, is that generally like, I guess, what do you generally do with options? Is it like selling calls on shares you already own, or do you do other stuff as well?
I mainly do cover calls. I do
Okay.
some cash secured puts. Um, Unfortunately, with the market downturn, I got signed some of my puts, and now I'm trying to do calls on them, and it's it's not working out real great in the down market. But I look at it this as all this is a learning experience, and it's a test
Yeah.
to see how it's all going to work when I retire and stuff. So now I know when I'm going in a down market, I need to keep a little bit more cash on hand so that way I can still sell some puts and not get completely stuck on the call side, or do some different things with rolling and options out and stuff before I do get stuck on the call side. Because previously, when the market was going up or and stuff, when you're doing your cover calls and puts, you can keep wheeling, and it just keeps working until the market drops. And
Yeah.
so I'm actually glad that the market dropped because it's helping me test out some of my strategies
Yeah.
that I'm doing and stuff. So I'll know how they'll work when it comes time for me to live off of the income from it.
Yeah. Do you anticipate like putting your portfolio into anything like safer, like any bonds or anything like that, or no? When you get at retirement,
Um,
would you say?
Probably not. I do have a bond fund in my 401k. That's a very small percentage. I don't know. It's all going to depend on the account value and how much income I can generate off of at the time I retire and stuff. Because like I said, I'm not going to be a millionaire, so living off straight off dividend income is probably not going to work. So part of my plan maybe will be to take my 401k money and put that in an account just for options. Um, Instead of like right now, I'm trading options in my traditional IRA, and it and I also got dividend stocks in there, and it's a little bit messy. I'd rather have just an options account, and
Yeah.
and then I'll also see how much dividend income I'm producing off my accounts. So I may wind up selling out of some of the something like a VTI or a Visa that has a lower yield and moving into something that has a higher yield, whether it be an individual stock or it be a income fund, something like a JEPI or JEPQ or something like that. It all depends on how much income I'm producing at the time, what I'm going to need to do. So I actually
Okay.
might wind up getting a little bit more riskier when I come to
Yeah.
retirement, moving into some more higher yield stuff. So we'll just have to see how it works out.
Okay. That makes sense. Do you I guess what do you think of the income funds? Do you know much about them?
I'm invested in JEPI, JEPQ, Devo. I like those. I was in Nusi, just recently sold out of Nusi. That didn't perform like I thought it would. I thought it would have more downside, better
Yeah.
downside protection. It just didn't seem to work. So I recently sold out of that and moved into JEPQ, and we'll see how
Okay.
that goes. I like those. As far as like the YLDs, like QYLD stuff, I'm not a big fan of those right now.
Yeah.
Um, when I retire, maybe if I need the income, I mean that's a possibility. Um, but right now, like with QYLD, probably in 8 years or so when I retire, um, I could probably get it for a real similar price with a real similar yield
Yeah.
as to what it is right now.
Yeah.
So my thought process is why not invest with something that has a chance to grow a little bit more, get some capital appreciation out of it and stuff. So
Yeah.
it's right now it's not all about yield.
Okay. Yeah, I think that's a good strategy to have. So, do you do any like when you're selling your options? Um, are you mostly doing it on like stocks you want to own? Like if you're selling cash secured puts, are you doing
Yeah,
it
that's
on like more stable dividend stocks, I guess, or like other types of stocks?
um I was a lot riskier earlier this year, and trading some the MJ stocks, trading options on them, and so, some other ones, some more speculative like highly on and some other speculative stuff. And I had some good gains there, but also I took some losses on some of that. So now I'm more into more stable companies, um, uh, companies that I do want to own or wouldn't mind owning. Like and even right now, it's not always dividend stocks because I am trading options like on GM and stuff. I, I like to own GM and stuff, so I actually have 100 shares that I've been um, selling cover calls on and just generating a little income off of that because I do want to own the shares and kind of like making my own dividend. And I've
Yeah.
been doing that with the shares I got the AT&T spinoff from when Warner Brothers spun off. I added to that to the shares I got, so I got 100 shares, and I've been doing the same thing with and there's others. There's like another one I'm doing is Camping World. Um, I've been trading options on that. That's a stock that I don't mind owning, but if it does get called away, um, I wouldn't mind it getting called away either. So but I'm trying to
Okay.
be a little bit less risky on some of the stuff. But like right now, I'm also stuck in XOXL semiconductor leverage
Yeah.
one. Yeah, I got to sign those shares and been selling cover calls on them and stuff. And I'm down quite a bit in that and just keep rolling it out. And eventually they'll come back. And
Yeah. When it comes back, it'll come back, man.
yeah. So it'll probably shoot up and probably blow through the strike price I have set on the cover call. And I'll be like, oh, I should have set it higher. But
Yeah. All right. And what else was I going to ask you? There was something I was thinking about. Oh, like when you're picking your stocks, I guess how do you choose what stocks you invest in? What do you look for in a stock?
now I'm looking more at the dividend growth and stuff. Having a strong track record of dividend growth. Um, a lower payout ratio. I don't want something with a big high payout ratio and stuff. A lot of the stocks I have, like when I first started, um, I bought my first individual stock March 24th, 2020. So it was almost at the low of, because that's when the money from my other job hit my account and I started buying. So some of that stuff is still around from that time frame, like lows I've kept. But at that time, I've bought and sold in and out of a lot over that time because when I first started doing it, it's like almost every day I was reading an article and go, "Oh, this stock sounds great. I'll buy into it." And, whether it be from Motley Fool or something I seen on YouTube, oh, let's buy into this. And so now I've whittled it down to companies that I want to keep that most of them have a good, strong dividend growth record and will continue to raise their dividend. So
Okay. Do you try to look into like the financials or anything like that, or
I do
um,
take a quick look at the financials,
okay,
try to see that the revenue is growing,
yeah,
and sometimes I'll take a look at their how much debt they have and compared to how much assets they have and stuff. So
yeah. I feel like debt could become like an issue for some companies in the next few years because I don't know. I feel like most of the companies I look at, I just feel like they have more debt than I would like,
yeah,
and they've probably just been like building that up over the past 10 years while debt has been cheap, or the past 5 years. and I just don't know how that's going to work for some companies over the next few years. But I don't
That's the
know.
one good thing about if you invest in quality dividend stocks, most of them been around for a long time, and especially like your dividend kings and stuff. So
Yeah.
they're creating cash flow and revenue and stuff. So it's their debt is probably a little bit more strategic, where some of your younger companies and especially some of your growth companies,
Yeah.
I mean, debt is what was keeping them going and stuff, you know, the cheap debt and stuff.
Yeah.
So with the rising interest rates, there could be a lot of
Yeah.
companies that are going to struggle.
And also, like, debt is sort of favorable in an inflationary environment as well. So it's kind of like, uh, I don't know how to describe it, but that's sort of like having debt when there's high inflation is like good in a sense, because the inflation is like essentially eating away at the debt.
Yeah.
But then if your interest rate goes up, that's not good, which is going to happen. So um, I don't know.
Yeah.
I
It's
guess
good
maybe
while
it won't be as
it's
big of
good
an
while the
issue.
inflation's up, but inflation's
Yeah.
eventually going to come down. And
Yeah.
then if your interest rate, if you have a high interest rate, you could wind up finding yourself in some trouble.
Yeah.
I've been there, done that with that. So
Yeah. The inflation data just came out today, I think for June, like 9%, over 9%. So
yeah, higher than what was expected. So
yeah.
it's going to come down. That is a lagging indicator though, because it is going to come down. Because I know gas prices were over $5 here. Now it's getting back around to $4.50 a gallon.
Yeah.
So I
I
mean,
think it's, yeah.
somewhat's going to come down. So
Yeah. I don't know. I just think the whole like stuff with the Fed is just not necessarily funny, but just like some people just get so riled up about it, and I don't know. I just don't worry about that stuff too much.
yeah, I don't worry about a whole lot of the macro stuff because I have no control over that. You know,
Yeah.
I tend to focus on more of what I can control. I can control how
Yeah.
much I invest, what I invest in, and as long as I keep doing that, I think I'll be fine and stuff. And what the Fed's doing and stuff. I mean, I keep it abreast of it and stuff, but I don't let it really affect or change too much what I'm doing and stuff because you start reading headlines and I mean, ever since I started
Yeah.
investing, every all the time, even when the market was going up, you always hear, "We're ready. The market's gonna crash next month," and it's yeah, you could stress yourself out
Yeah.
reading headlines and trying to figure out what the Fed's doing and what else is going on, and it's just I don't want a whole lot of stress with that. I just control what I can control and go
Yeah, I
from
agree. I was actually like just I was just so surprised in 2020 when the markets just kept climbing. I just could not believe that. And I mean, it's coming down now, but like in general, the indices are still like above where they were before. So
Yeah, it
it
was an
just goes to
interesting
show,
time.
I guess it just goes to show um, I mean, part of it for sure is like inflation, but also it just goes to show the sort of the power of investing, and that like even though the past few years economically haven't been that great, like they're still doing well in the markets in general. So
Yeah, that was an interesting time because so that's when I first started investing and was trying to
yeah,
figure it out. And essentially, because of when I started in March of 2020, anything I picked was a winner. I mean,
yeah,
you almost couldn't go wrong at that time and stuff. And I've had some good winners from that. So, um, but now's another learning experience, and with the market down and stuff, and so continue to learn.
Yeah, and I think that happened to a lot of people. Is they just picked some stuff when they started out in like spring or summer of 2020 when there was a lot of excitement around the stock market and everyone thought they were doing great. And I mean, sure they were, but um, you know, that came down a bit. So yeah, it's definitely a learning experience, and uh, I certainly wish like I knew more in 2020, so I could have like made better investments, because um, I pretty much started investing like at the beginning of 2020,
Mm-hmm.
and where I was like trying to figure stuff out, and so like during the March 2020, I was just like didn't really know what I was doing. I'd kind of like gotten into dividend stocks a little bit, but didn't really have any concept of how to like know what companies were good or not and how to pick a decently good dividend stock that wasn't gonna change its dividend every quarter or do some random stuff.
Yeah, like I said, that was I bought a lot of stocks in that time frame and stuff, not really knowing what I was doing. I made some good picks because, um, like I said, I was mainly doing dividend investing then because of who I'd found on YouTube and stuff. And um, but I wound up selling out of some, and some I probably shouldn't have sold out of, but I did, and continue to learn. I mean, it was a pretty challenging time though to actually start investing with the market dropping, and people were going to saying at the time, and it was going to continue to drop. I mean, do I
Yeah.
keep buying? I just got this lump sum of money put in my account, and I said I'm older, and I knew I had to get it right. So that was a bit of a stressful time trying to figure everything out
Yeah.
and learning as I went. So
I guess I'm curious about your job as well. Like, what was that like for you over the past few years? Like, obviously, working in a factory, that's more of like I mean, I don't know what you do specifically, but usually that's something you can't just like say, hey, go home. Like, that's not really going to work. So, how did that work out for you?
yeah, like during the pandemic and stuff. Is that
Yeah.
what you're referencing?
Yeah.
We actually did shut down from my company. Sort of shut down from. Uh, I'm in Michigan, and they ordered us pretty much everything to shut down in March. We wound up really opening back up. I think it was June, but I never got laid off. Most of the employees got laid off. I was considered an essential employee, and actually had a letter from my company just in case I got pulled over going to work and stuff. But yeah, we continue to work. I make the business I'm in. We make auto parts, so I mainly most of our work is mainly for GM. We do some Chrysler work, so yeah,
Okay.
it's a
Interesting.
cyclical business.
Yeah. So I guess for you, it didn't really have that much of an impact, you would say, or
No, the biggest impact was changing my schedule around because I normally work third shift, and
okay.
during that time I got moved to first shift because they were just running the
Okay.
skeleton crew.
Yeah.
So yeah,
Okay. That's
so
interesting.
really it had economically really didn't have any impact on me because I never missed a paycheck or anything. So.
It's good to hear. I know, like, I don't know. I just feel like the things people were suggesting were just largely targeted or um, I guess created in a way that like worked well for like office employees, but like didn't seem like it would work very well for sort of blue collar workers, I guess. And
Yeah, there's not a work for home option
yeah,
for
exactly.
us. So I mean, we have to be there. Um,
Yeah.
So, and so like when we did come back, it was challenging because we had to set up to do temperature checks before everyone came in the building, and trying to keep people spaced apart in a factory setting is not always easy and stuff. So, um, and for a while in between each shift, we had to go down and shut down all the machines in the plant. Um, Let the workers who were at the machines go away. Let the new workers come in and they clean up their area for a few minutes and start all the machines. It was, we did that for a while, and it was created a lot of extra work and stuff, but we made it through it. And
That's good. So, I guess what are your plans for the future? Like, are you just kind of continuing on the current path?
yeah, right now, I want to retire before I'm 59 and a half. That's the goal. Um, I'd like to retire even sooner. Um, but I'm continuing to follow my plan. I DCA into every every month, or like my taxable account, I put in $25 a month. Like that's a small account. Um, for my Roth, I'm contributing every 2 weeks or twice a month. 401k is I do up to my employer's match, and that's every 2 weeks. Um, so I'm going to continue that. I'm continuing to pay down my debt. Pretty much all I have left. I have a little bit besides my mortgage, but it's almost all my mortgage now. I do want to have my house paid off before I enter into retirement. I just don't want that. I know there's a debate whether you should or shouldn't pay off your mortgage early and stuff, but before I retire, I don't want to have that weighing
Yeah,
over me, just in
yeah,
case something does happen. I want the house paid off, so I don't have to worry about that. And So I'm trying to fast track paying down my mortgage a little bit. And there is a slight possibility I might be able to retire in like 5 years. A lot of work to do for that, but definitely I should be able to in a little over 8 years. So
okay, that's cool. So, yeah, I guess we can talk about like your uh, website a little bit. Like, what made you want to start that up?
I started that. It was largely due. Um, it was I wanted to do like a financial journal and track my journey, and um, so that way I go back and look and see what I did back then, and see how I've grown, and as a learning experience and stuff. And I'm like, if I do this, if I create a website and do it, it'll hold me a little bit more accountable, because even though I don't have a big following, um, I could at least in my mind, it was like, I need to do this weekly update, because if I didn't have the website, there'd probably be some weeks where I wouldn't do an update. I'd miss a month here and there with an update if I was doing a journal just for myself. So putting out there publicly helps me. Then also I just want to show that anyone can invest. Anyone can become wealthy, especially if you start early enough. Like you're on a track right now where you're going to be wealthy when you're older and stuff. Because
Hopefully, yeah,
you have so much time on your side. As long as you don't break that compounding and continue to contribute even a little bit and stuff, you're on a good path. But
yeah,
even if you start late like I did, you can still build a nice account and be able to produce income from it, so you can have a good retirement and stuff. So anyone can invest, and if I can do it, then I'm just someone who's worked in a factory, like I said, for almost 30 years now, and anyone can do it. You don't have to make six figures. You don't have to make a lot of money in order to invest. So
yeah. I think that's definitely true, obviously, but think that's good that you're sharing that. Is there any like, I guess what do you mean? What do you have like goals for that, or is it just kind of like, again, continuing like what you're doing there? Um,
Um, as far as the website, um, I don't know. I'm going to continue doing the updates that I've been doing, and I'd like to do a little bit more with it. I've got to find the time to do it and stuff, but I would like to do a little bit more, maybe educational and instructional things for people to, so that way, like I said, everyone can invest and to help guide people into investing more and stuff. And so yeah, I plan to grow it a little bit, but
okay, yeah, makes sense. Is there anything you want to talk about? I feel like your investing strategy is just super like simple, which is great. So it's not like you can talk about it for a while. I mean,
it
is there
really
anything
is
you think
simple.
you want to expand on with it?
It really is simple. I mean, like I said, I just dollar cost average in, and pretty much I really haven't been adding any new stocks or any new positions. But I did just add JetQ when I sold out of Newsy, um, and I just reevaluate. Like I recently sold out of OHI. I thought the risk was too great there on that one, and moved the money into medical properties and
Is that a REIT?
yeah, OHI, Omega
Yeah.
Healthcare, and
Okay.
um, I just try to keep
What
it simple. So
what didn't you like about that company?
it their when I was looking at their dividend safety record score and stuff, they could be in for a dividend cut here in the future and
Okay.
stuff. So so I figured my
Yeah.
money would be better served someplace else.
Yeah, that
And,
makes sense.
and I have this thing. I do have a watch list that I keep, but I'm really bad with it of watching my watch list. So if there's a company I'm interested in, I'll start a small position in it in one of my accounts because I follow my accounts. I keep track of my accounts. So that way it's sort of my watch list within my account.
Oh,
And
okay. Yeah.
I'll keep it in the account. And then if I decide after a bit that, all right, this really isn't something I want to invest in, I'll move out of and stuff because it's, I don't know, it's just a mental thing where, like I said, I do have a watch list, but I don't watch it as much as I probably should to see what the companies are doing. If I put it actually in an account and I actually have money invested in it, I will follow it and keep track of it. So I will do that from time to time. Start a small position in a company and track it for a few months and decide that, all right, this one is probably not for me. I'm gonna move on to something else. So
Yeah, that's something like I want to get better at, I guess, is like looking at companies that I don't own and being able to like, I guess, have more of a plan because um, like it's easy to, you can look at a company and say, well, a company is decent, but I don't want to buy it right now because it's too expensive or something like that. Um, or what I find happening to me is there will be like some earnings report or something happens and the company drops like 10% or something. And my perception of the company is generally good, but I don't have much actual knowledge about it. And so I'm like, well, I don't really have enough confidence at that point to invest in it. Whereas if I was just like more educated, I guess, about other stocks, I would sort of be more ready for that. And but at the same token, I don't really necessarily want to add many more positions to my portfolio. So I don't know. It's an interesting balancing act. But at the
yeah,
same time, is it worth like spending much time thinking about? I don't know. Maybe
Yeah,
not.
it's definitely a little bit of a dilemma and stuff because like at one time my account had quite a few more positions in it and stuff, and I've trimmed it back because trying to keep track of a lot of them was a little bit too much. And like I said, I do have a little bit of a watch list, but I don't really want to add anything else because I'm real comfortable with what I have, and so it becomes. But there's so many good companies out there, and you stuff,
Yeah.
and like I've been looking at Stanley, um, what is it, Stanley Black and Decker recently,
Okay.
and they look really undervalued, and it's I use the tools and stuff, and so it's something that interests me. I just haven't pulled the trigger yet. Um, I don't know if I will. Maybe I will. Maybe I won't. But but yeah, there's so many good companies out there, and trying to keep track of so many and whether to add a new one and stuff. And because like I
Yeah.
said, when I first started out, I was constantly adding based on a YouTube video or an article I read and stuff. And the next thing you know, here it is with my traditional IRA. I probably had like close to 70 positions, and
Oh, jeez.
it's like I need to trim this back. I don't even know what some of these companies really are and stuff because I will. When I first started out, I wasn't doing a lot of research and stuff. I was just going by, like I said, what articles I read or what I seen on YouTube, and
Yeah.
this guy really likes that stock. So
Yeah. I think that's something interesting is like the number of positions. Like I saw something on Twitter like it's probably like a week or two ago. Some guy had like it listing like some Excel spreadsheet or something. He had posted with his portfolio, and it was like 250 stocks.
yeah,
And I was like, okay, that's interesting. Are you gonna like pay attention to those companies? And I don't know. I forget what he was talking about, but it just
and
like
there's
I just
different
don't
trains
know
of thought.
how you can do that. There's different
I
what?
There's different trains of thought on that.
Yeah,
There's some that, um, like I know someone who believes that you need at least 100 positions. So that way, like if something happens to one of the companies, only 1% of your portfolio is affected.
yeah,
But there's also the other train of thought where to stay concentrated in only a few stocks, because keep adding to the winners basically, and let the winners run. And if you're concentrated, you'll actually gain more.
yeah,
So if you pick the right stock, if you're
yeah,
concentrated, you got to make sure you're really picking the right one. So
yeah. And honestly, that's like one of the things I like about the stock market is there's so many ways to do well. There's not like one right answer, you know. It's just different people have different ideas, and a lot of times they might like not necessarily argue about it, but like debate it or, you know, talk about why what they're doing is better. But at the end of the day, like there are lots of ways to do well, and there's certainly lots of ways to do poorly as well. But
you
um, it's not like
just
a
got to
one
find what
size
works
fits
for you.
all strategy either.
Yeah, you just got to find what works for you.
Yeah,
What fits
exactly.
you, because everyone's different. I mean,
Yeah,
everyone, like your time frames are different. Goals, and
yeah,
risk tolerance. So and how much time you want to put into it. I mean, some people don't want to research stocks and
yeah,
stuff. And so that's kind of like my method. Like I said, I kind of have the hybrid method and stuff where I invest in the total stock market. I invest in like SCHD is my largest holding. Um, then I also have individual stocks, and like I said, I have a little bit of growth and stuff. So that way, I feel like I'm kind of hedged as far as that goes. So like with having the total stock market fund, it I'm guaranteed at least with that portion to track the market. Whereas, and some of my other stuff some of my individual stocks, some won't do as well as what the market return is, and some will do better and stuff. And hopefully in the long run, I can get around a market return. So
Yeah. That's cool. Do you own like any stocks that are sort of like lower dividend yielding, like Apple or Microsoft or stuff like that?
Microsoft is my largest individual stock
Okay.
position. So,
Okay.
and then I also own like Visa,
Okay.
and there are some other ones. And it's I like those for the dividend grow,
Yeah.
and and uh and like long term, like Microsoft, I feel is going to be as well positioned for long term. Um, I still feel Visa's well positioned for the long term. I know some people would argue against that, but with some of the other fintech companies coming up, that they
Yeah.
could be disrupted. But um, and I look at those as because I do need some growth in my account. Because if you're investing in like the 3Ms and stuff,
Yeah.
I mean, there's nothing wrong with that. I do invest in 3M, but I also need some growth. And then if the time comes when I retire and stuff, some of those like Visa, the lower yielding ones and stuff, I could possibly sell out of and stuff. And
Yeah.
and like one of my best performing ones has been Lowe's, which is sort of a low yielder.
Yeah.
It's definitely not a high yielder and stuff. But when I bought that one, I think my cost base is around $86 on that one and stuff, and it's just it's just been a growth machine for me and stuff. I bought that at the
Yeah.
perfect time back in I think it was April of 2020. So,
Yeah.
um, but yeah, I feel like having a balance of some of the high yielders and also some of the lower yielders and stuff. So you do have some of that capital appreciation. You see some of that growth is a good
Yeah.
thing.
I think that makes sense. And like you said, you can always kind of move it over when you get closer to retirement and more needing that income.
Yeah.
Um, do you, when you receive your dividends, do you like reinvest those directly, or do you just take those in cash and use them to invest in other companies?
The majority of them are directly reinvested back into the underlying position.
Okay.
There are a few like my Ultra group is I have over 100 shares of that, so it's a sizable position for my account, and it's actually in the top 10 positions, and I don't want that to keep growing right now because I like the position size it's at. So like that, I'm taking the dividends and reinvesting elsewhere. So it all depends on basically on the position size and where I
Okay.
want it to be in my account. Um,
Yeah.
I don't like trimming. I know people will say if something gets too big for them
Yeah.
to sell some. I have a hard time doing that. I because like I said, Microsoft wound up being my largest position, and I'm trying to get my VTI and my traditional IRA ahead of Microsoft, but Microsoft continues to stay ahead of it and stuff, even though I'm adding the VTI. But I don't want to trim the position, and
Yeah.
so if I decide that something as big as I want it, or even a little bit too bigger, I will just take the dividend instead of reinvesting in that position, take them and reinvest them elsewhere into a position that I want to grow. So,
Yeah, that makes sense. Are there any stocks recently that you've been like buying more of, or you think are at great prices right now? Like, what have you been looking at recently?
um, I've been buying a lot of U.S. Bank Core.
Okay.
Not a lot. I don't have a lot of money that I'm putting in, but I have been buying more U.S. Bank Core. Um, I like that one. I've been adding a little bit to Lowe's, Tractor Supply Company. Um, what else I've been adding to recently? So I'd like to add more to Prudential. So so Texas Instruments, another one.
Okay.
So
All right. Interesting. I don't know that much about Prudential, um, but I think I did see Texas Instruments did look actually at a. I think they might have had like some sort of big drop, if I'm not mistaken. I forget though. I guess maybe not. I mean, obviously they dropped it this year, but I thought they had like some like real big down day, but it doesn't look like it.
so yeah, they might have had a little bit of a down day a little while back when um, they announced they were going to be spending a lot more on capex and expanding, and I think some
Okay.
investors didn't like that. Um, so
Yeah, I think the whole like I don't know. I just don't understand earnings in general. Like you never know what's going to happen after a company announces their earnings or results and stuff. It's just I don't know.
it's it's just crazy. Someone I I couldn't understand it when I first started trying to follow earnings and stuff. Someone would have a real good earnings report and the stock price would drop, and it's like
Yeah,
that doesn't make sense. Or someone would come up with a bad earnings report and the price would go up. It just there's a lot of stuff that doesn't make sense with the day to day stock market. Why things
yeah,
go up, why things go down. Like I think this morning the stock market was down quite a bit, and I guess by the end of the day it wasn't down quite as much. And
yeah,
you would have thought with the CPI coming out higher than
yeah.
expected that
Exactly.
it just would have just tanked all day, and
Yeah,
it just so I don't really follow the day to day too much and stuff, and I said just stick to
yeah.
my
And then what gets even more confusing for me is like when people say things get like priced in. Like investors are like expecting something to happen already, so then that gets priced in, and then so then when that thing happens, it doesn't actually affect the market at all. And I don't know.
yeah. It's
Like I
strange.
said, like you said, like the day to day stuff isn't worth worrying about that much. As long as you're consistent over time and you know you have a
Yeah,
strategy that
yeah.
works
You
for
still
you.
need to keep an eye on follow stuff, just in case something substantial changes in the company.
Yeah,
Something that would change your investing thesis. But it's a lot of this day to day stuff, it's just I just
noise.
kind of let it go in one ear out the other and
Yeah,
follow my plan.
yeah. All right. I guess is there anything else you want to talk about? Is there anything you want to ask me? Um,
No, I don't think so. I appreciate you having me on,
yeah.
giving me
Um,
a chance
I
here.
think
So
yeah, I think it was interesting to hear. I guess just a different perspective than what I certainly have. And yeah, um, definitely we can tell everyone to go look at your blog at bluecollarbill.com, and you have a Twitter page as well. So um, just good ways to stay up to date. Is there anything else you want to say?
no, that's about it. Again, thanks a lot. I appreciate it, and um, I look forward to following along on your YouTube channel and following your journey. So
Yeah, I look forward to seeing how you're doing as well. I think it's definitely like encouraging to see for a lot of people. I would say like what you're doing and just showing them that people can do that kind of thing, and it doesn't. you don't have to do anything crazy, or sure, you might have to learn some basic information, but at the end of the day, it's not like something that only the institutional investors can do. And I think you're a good example of that. So
yeah, investing's a lot easier than what I originally thought it was. Before I started investing, it seemed real intimidating and stuff, but
yeah,
anyone can do it. So.
yeah, I think that's a good message to end on. So again, thanks for coming on. I really appreciate it. I hope everyone had a good time, and we'll see you in the next one.